Hi there, you're watching Market Cafe on ET Now with me Shreyansi Singh, and with me as always is Snehi Shah, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar in the trading session today, and also tell you what the brokerages are saying as well. But first things first, let's take a look at how the handover is coming in from Wall Street. And Snehi, what a day, right? Record close coming in for three indexes.
Absolutely, stellar moves coming in for Wall Street. And let me take you through what the US markets looked like yesterday, because what a day in trade for US markets. Now, stock futures, however, were near flat last evening after lighter than expected inflation reading propelled the major averages to record highs, like Shreyansi mentioned. Now, in irregular trading, all three major averages have closed at their record highs each. The Dow has climbed almost 0.9%, while the broad market S&P 500 gained 1.2%, ending the session above 5,300 for the first time. Nasdaq has also closed higher by 1.4%. Now, that performance was helped by the April reading of the Consumer Price Index, which is a broad measure of how much goods and services cost at the cash register, which increased 0.3% from the prior month. Slight bit of an easing coming there on that front as well. And we'll tell you more about this later in the show too. Now, today investors have a batch of economic data to look forward to, including the widely watched weekly jobless claims that will be released today. The Philadelphia Fed Reserve Manufacturing Index will also be out today, and investors are also looking forward to earnings from Walmart that is due before the bell on Wall Street, along with Under Armour as well as Baidu. Largely, that is a handover coming in from the US markets. Very good moves coming in. You have Dow clocking up almost 1% higher. S&P 500 has closed above 5,300. So that is also with an uptick of 1.2% intraday yesterday. And Nasdaq also outperforming the other two indices at 1.4% higher. Largely, this is the handover coming in from Wall Street. Good moves coming in, and even across Europe, all I can see is a sea of green, because DAX has closed higher by 0.8%, FTSE has closed higher by 0.2%, and the Pan-European Stock 600 index also looking good as of now. 0.6% higher is where that index is closed as well. So very strong global cues coming in this morning, at least on the equity front. Shreyansi, take us through what's happening with the world of oil, and good moves coming over there as well.
Yeah, absolutely, and even for gold as well. But let's take a look at oil first. And US crude oil rose after domestic stockpiles declined more than expected. So in the US, commercial crude oil inventories, which exclude the Strategic Petroleum Reserve or SPR, fell by 2.5 million barrels last week, according to data released by the EIA. And that, of course, compares with the Reuters estimates that we had of 543,000 thereabout, that kind of a draw. And now when you look at the price levels, then when you're looking at WTI, you're looking at gains coming in of about 0.8%. Year to date, US crude oil has gained 9.7%. When you look at Brent as well, that was around $82 a barrel, up 37 cents, or about 0.5% year to date. That contract has also gained 7.4%. And when you look at global crude inventories, then they surged in March by 34.6 million barrels as trade disruptions pushed oil on water to a post-pandemic high, according to the IEA. Now, oil deliveries have been rerouted this year due to attacks by Yemen-based Houthi militants on shipping through the Red Sea route. Now, OPEC Plus, when you look at the picture coming in there as well, OPEC Plus will likely take a close look at global inventories to gauge the balance between supply and demand at its June meeting, according to the IEA. And some OPEC Plus members have also implemented voluntary production cuts to the tune of about 2.2 million barrels per day to support crude prices as well. So that largely is are all the factors that are playing out right now in the oil market. But when you look at gold, then gold hit a more than 3-week high, aided by a weaker dollar as well as lower treasury yields after data showed that US consumer prices rose less than expected in April, boosting chances that the Federal Reserve will cut interest rates later this year. Of course, gold prices do work in tandem with expectations about interest rates then. And when you look at spot gold prices, then 1.2% higher, coming in at $2,386 an ounce. So that is the handover coming in for oil as well as gold, Snehi.
Absolutely. With that, let's also take a look at all the important cues that you need to be keeping on your radar for today's trading session. And in terms of global cues, then from the US, we're expecting initial jobless claims data along with industrial production data today. And shifting focus back home, let's talk about some earnings then. And on the Nifty front, today you have M&M, which is Mahindra & Mahindra, coming out with its Q4 numbers from the Nifty pack. Other than the Nifty pack, from the broader markets also, you have a whole host of companies coming out with their numbers. And important numbers coming out, the likes of Vodafone Idea, you have IIFL Securities, JK Paper, Kim's Hospital, AkzoNobel, Crompton Greaves, Biocon, Motherson Sumi, DCX Systems, Sansera Engineering, a whole host of companies along with others coming out with their numbers today. Now in terms of corporate action, then TCS will be in focus because that company is going to be rolling out its final dividend today, and Vedanta will be the stock to watch out for today because the board is going to be meeting to mull dividend along with fundraise. Now this fundraise can either happen via FPO, rights issue or other means as the board deems fit, but today we'll get a decision on what the board has decided. In terms of lock-in period, then a 4% equity is coming out of lock-in for Vibhor Steel Tubes today, and lots of action is happening globally other than market news as well. You have Japan GDP and industrial production data coming out today. You have Vladimir Putin of Russia. He's going to be visiting China today and tomorrow, so that's going to be an interesting geopolitical and economic event to watch out for and how that develops going ahead. Brussels Economic Forum is also going to take place, and Morgan Stanley Global Markets Conference will be taking place in Paris. Simultaneously, you also have the NATO military chief meeting in Brussels. That's going to be happening. And along with all the commentary that we've been getting over the last week when it comes to all the Fed members, yesterday we also had comments coming in from Jerome Powell. We spoke about that on the show yesterday. Today we are expecting comments from Fed members Bauman, Harker, Loretta Mester as well as Raphael Bostic. So important comments to watch out for on the back of this inflation data that we are seeing recently. So we'll be keeping a close eye on all of these cues in today's trading session.
Absolutely, a close eye on all of these events and also data sets, right? So speaking of data sets, let's also take a look at the US CPI print, and the latest CPI report for April show that inflation eased slightly with consumer prices rising by 0.3% from March. Inflation also fell slightly to 3.4% on a year-on-year basis, in line with what was being penciled in, and it compared with March's rate of 3.5% and ended a 4-month streak in which inflation outstripped expectations as well. Core inflation, excluding food and energy, was at 3.6%, the lowest since April 2021. In more macro news, US retail sales were also flat on the month, compared with the estimate for a 0.4% increase as well. But let's also delve a little deeper into this, and we also caught up with market expert Manish Singh. Let's listen into what he had to say about the print as well.
So if you look at the breakdown of this inflation number, almost 70% of the inflation you have seen in this data comes from housing and car insurance. Now, housing or the owner equivalent rent, OER, several measures have indicated that that's a lagging indicator. If you look at the real-time data of where the rents are in the US and US market, they're not as high as what the CPI number indicates. And this is something Chairman Powell has pointed out. This is borne by data in real time from other sources. So as that comes down, you're going to see the CPI number come down as well. But let's not think only in terms of when it goes to 2%, because if we wait for that long, we might end up having a recession. And this is something that Chairman Powell has been very insistent.
Alright, let's move on and then talk about Dell, because the stock of Dell has soared 11% to an all-time high in yesterday's session after Morgan Stanley released a bullish note on the company and raised the target price for the stock while calling it their top pick. Analysts predict that a massive demand for AI servers will significantly boost the company's sales, and they say that improving PC market is also driving the momentum for the stock.
Meanwhile, Japan's economy contracted in the first quarter of the year, with GDP shrinking at an annualized pace of 2%, a steeper decline than the expected 1.2%. This downturn reflects reduced spending by consumers and businesses, highlighting the fragile state of the recovery. Now, private consumption and capital spending declined, while when you look at net exports, they also contributed to the economic slowdown. The preceding quarter of 2023 also showed flat results upon revision.
Alright, let's shift focus and talk about Netflix, because Netflix's ad-supported tier has surged to 40 million monthly users globally, nearly doubling from earlier this year. The company will launch its own advertising platform, parting ways with Microsoft for this technology. Plans include testing in Canada later this year and a US launch by mid-2025 with a global rollout by 2025. This growth reflects Netflix's strategy to diversify revenue amid stiff competition.
And the US is gearing up for one of the largest elections in the world, and President Joe Biden and former President Donald Trump have agreed to participate in two debates scheduled for June 27th and September 10th. These debates will mark key moments in the race for the White House. Biden affirmed his readiness for the debates, echoing Trump's challenge of anywhere, anytime, anyplace.
Well, let's shift focus, and in a shocking development, Slovak Prime Minister Robert Fico was shot 5 times in an assassination attempt by a 71-year-old man whose motive remains unclear. The suspect was immediately detained while Fico underwent surgery and is now reported to be in a stable condition. This rare act of political violence has unsettled the country, known for its stability within NATO and the EU.
Alright, then let's move on to some news back home then. And Prime Minister Modi held a mega rally in Mumbai's Ghatkopar. The roadshow covered 2.5 kilometers with the PM campaigning for BJP's Mihir Kotecha. Kotecha is contesting from the Mumbai North East constituency. Here's what we got from his public address in Kalyan before his rally.
देश पहली बार 25 करोड़ मेरे गरीब भाई बहनों को गरीबी से बाहर निकलते देख रहा है। पहली बार हर गरीब के लिए पक्के मकान बनाने का पुरजोश काम चल रहा है। पहली बार हर घर को नल से जल मिले, ये अभियान सफलता की नई ऊंचाइयों को छू रहा है।
Alright, that's the key takeaways from PM Modi's speech in Kalyan earlier yesterday before his rally. But let's move on and let's keep it going, in fact, with the earnings, the elections, pardon me. And Bollywood actor and now BJP's Lok Sabha candidate from Mandi in Himachal Pradesh, Kangana Ranaut, has declared assets worth over 90 crore rupees as per a poll affidavit. My colleague Anurag Shah is here with a breakdown of all of her assets and more details on that. Anurag, take it away.
So, Kangana Ranaut has declared asset of 91 crore, which includes 28 crore movable assets, 62.9 crore immovable assets, 6 kg gold, 60 kg silver, ornaments. Other than that, properties in Mumbai, Chandigarh, Manali, luxury cars, BMW, Mercedes-Benz, Mercedes Maybach worth of around 4 crore. But most important part of Kangana's affidavit is about her investments in LIC policies. So, Kangana has 50 LIC policies, and interesting part is that all 50 LIC policies are purchased on same date, that is 4th June 2008, and out of 50 LIC policies, 49 policies are of sum assured 10 lakh rupees and one policy is of sum assured 5 lakh rupees. So, many are saying that it's not a good investment strategy, but we have spoken to experts and experts are saying that it's a tax saving strategy in which these are the 50 life insurance policies being bought and the maturity will be every year, recurring maturities will be there, and the benefits of maturities will be completely tax-free because the policies are bought in 2008. So, during that time, if your sum assured is not more than 20% under section 1010D, maturity benefits are completely tax-free. So, it's like a pension plan where you don't have to pay any sort of tax during maturity. So that has been purchased by Kangna in 2008. Other than that, the affidavit also says there are no more details about the LIC policies, but affidavit says that these LIC policies are having a surrender value and paid up value. So we are assuming that these are the endowment policy. So these policies during the maturity, the money will be completely tax free, and in 2008 these policies are bought. So after around 16 years there will be maturity. Every year there will be maturity of some policy, and in a form of pension the maturity will be completely tax free. We know that from 1st April 2023, if your overall premium is more than 5 lakh, then the maturity benefits are taxable. But these policies are bought way back in 2008. So overall maturity benefits are completely tax free and in a pension form. So good tax saving strategy adopted by Kangna.
All right, thanks Anurag for all of those details. But time for a quick break then. But when we come back, we'll take a look at how the Asian markets are faring.
Hi there, welcome back. Thanks so much for still staying tuned to Market Cafe. You're watching ET Now. Let's take a look at how the Asia Pacific markets have opened up this morning, largely looking in the green and nothing to worry about as of now, at least when it comes to the Asia Pacific markets, mimicking the moves that we've seen on Wall Street yesterday. Remember, these benchmarks on Wall Street closed at record highs on soft inflation data. So good moves coming over there, and we can see the spillover effect coming on Asia as of now as well. Investors have been assessing the Japan GDP data. Remember on the show earlier, we told you that Japan's first quarter GDP contracted at an annualized rate of 2%, more than the 1.5% that was expected in the Reuters poll, and the latest data could likely jeopardize the Bank of Japan's plans to raise interest hikes. Now, on the back of this, despite the data coming in, Japan opened higher by 1% and is still trading with an uptick of 245 points, 0.5% higher, slightly more than 0.5% higher is where Nikkei is trading as of now. Now, South Korea's markets, they reopened after a midweek holiday yesterday. Kospi jumped 1.5% higher on open, has lost some of those gains, but as of now also continues to trade with an uptick of 0.8%, 22 points higher is where Kospi is as of now. Now, in Australia, the ASX 200 index gained almost 0.6% on open, and well, it has strongly spiked up after that and is trading higher with almost 1.8% gains as of now. So good moves coming in for ASX 200 as well. Now, shifting focus to Hong Kong. Hong Kong also reopens after a midweek holiday yesterday. So on the back of that, Hang Seng has opened with an uptick of 0.5%. Good moves coming over there as well. 102 points higher is where that index is. Lastly, let's also take a look at what Shanghai is up to, and Shanghai also pretty well in the green. 0.4% higher is where Shanghai is trading as well. So, well, a sea of green and a comfortable positive moves coming in from Asia markets as of now. But let's shift focus and talk about where we were in yesterday's trading session. And back home, we've closed at the 22,200 levels, and implied open, or the GIFT Nifty, is indicating a rather positive start today. A gap up open, if I may say so, at 22,378, which is a good 178, so almost 180 points uptick coming in on the spot basis compared to where we closed yesterday. Remember, overnight, Wall Street has done really well. European markets closed also pretty well yesterday, and as of now, Asia is looking very positive too. So strong global cues coming in, so we can expect a good trading session on the back of that. Also with the implied open indicating a very positive start, Shansi.
Absolutely, and let's see how that pans out for us, right? But then let's get a move on then and take a look at April trade data. It is key to know that India's merchandise trade deficit also widened to $19.1 billion in the month of April, which is much higher than the $15.6 billion recorded in March. Now, when you look at merchandise exports, inched up by over 1% on an annual basis to $34.99 billion. Meanwhile, when you look at imports in April, they stood firmly at $54.9 billion as well. So that largely is the handover when you look at April trade data as well then.
All right, let's shift focus. Let's get a little bit more stock specific now, and let's talk about Mankind Pharma, because that company has reported an inline set of Q4 numbers. The board has also gone ahead and approved raising 7,500 crore rupees as well. My colleague Somit is joining us this morning to tell us what this fundraise could potentially mean. Somit, good morning. Well, break this fundraise down for us.
Well, Mankind Pharma's Q4 has seen a strong growth on a both YY and Q-on-Q basis. Now, the strong growth was led by exports and higher gross margins. If you see the exports for the company, they have jumped nearly to 30% on a YY basis, while gross margins have expanded by nearly 260 basis points on a YY basis to around 70% in the fourth quarter of FY24. Now, this jump in the gross margins was largely on the back of favorable changes that we have seen when it comes to companies' inventories and stock in trade. Domestic pharma business on the other hand, if you see, their growth was around 11%, which was still ahead of what the peers have reported, a growth of around 7 to 8%. And this outperformance in the domestic pharma business was driven by outperformance in the chronic therapies and the recovery that we have seen in gynecology products in the fourth quarter of FY24. However, the bigger news that has come in Mankind Pharma is the board approval of a fundraise of close to 7,500 crore rupees. Now, what could be this fundraise? Now, as per media reports, the company is looking to acquire Bharat Serums and Vaccine, and most likely this fundraise, if it goes through, would be used by the company for this acquisition. Now, why the company is looking at this acquisition? Because fertility is one of the focus areas of Mankind, and Bharat Serums, if you see, is specialized player in women's health segment. So that could be the reason why Mankind Pharma is looking to acquire Bharat Serums. Now, over the past over FY21 to FY23, if you see, Bharat Serums revenue have increased from around 926 crore to 1,400 crore rupees. Its EBITDA has increased from 150 to 250 crore rupees, while its margins have remained in the range of around 16 to 21%. Now, what could be the valuation at which they would go ahead and acquire this company? The enterprise value, as quoted by media, ranges from around $1 billion to $2 billion. And if you see the EV to EBITDA at 1 billion, if you see, this acquisition would be around 33 times enterprise value to EBITDA. At 2 billion, the acquisition valuation would be around 66 times. Now, at 2 billion, the acquisition looks quite expensive, given the fact that Mankind Pharma and Torrent Pharma, who are also domestic focused pharma companies, trade at a valuation of 31 to 46 times. Now, the company will be holding its conference call today at 12 p.m. and the key questions there asked by the analysts would be the sustenance of this export growth that we have seen, how sustainable is the margin going forward, reason for the fundraise, and what are the potential M&A targets for the company going forward. So keep an eye out for Mankind Pharma.
All right, thanks, Swami. Thank you for that update. We'll definitely be keeping an eye on Mankind Pharma in today's trading session. But let's move on then. And FM Sitaraman has put out a series of posts on X highlighting the Modi government's capex push since 2014. My colleague Sumit Chaturvedi is standing by with more details. Sumit, take us through what this data set really indicates then.
Finance Minister Sitaraman once again today sharpened her attack on UPA government, which was in India from 2004 to 14, saying that the capex was not there, and in their regime, the capex has been spent mainly on infrastructure development that has led to better economic life for people, better facility for people. She has given example of port, aviation, railways, power sector, also building bridges, building infrastructure, building road. All that has been contributed to economic progress of the country. She has also given examples how development of overall roads infrastructure and spreading more of them has led to less time when it comes to transportation of goods, but it was not happening during UPA regime. She has given a particular example of overall UPA when it wasted India's economic growth potential and left it among fragile 5 economies without focusing on effective infrastructure. So she compared infrastructure development from 2014 to 2024 and earlier from 2004 to 14. She has also laid emphasis on how PM Modi-led government has spent more on defense, giving an example how A.K. Antony-led defense minister, when he was there in the UPA regime, he gave an example that underdeveloped borders are better than developed borders. But she said, Sitaraman said that in India's case, in current NDA's case, we have given equal emphasis to every border that is going to be developed, every village that is going to be developed at the border. So clearly she has laid out how different it is infrastructure development till the border points as compared to UPA.
All right, Sumit, thanks so much for summing up the FM's comments for us. But let's shift focus and talk about some data coming in. And as per the latest Labour Force survey report by the Ministry of Statistics and Program Implementation, the urban unemployment has decreased to 6.7% for the Jan to March quarter. Female unemployment rate has decreased to 8.5%. And my colleague Prakash Priyadarshi is here with more details and a summation of this report. Prakash, good morning. Over to you.
Yes, a very positive development coming in as far as employment prospect in the country is concerned, as the MOSPI has come out with the details of periodic labor force survey for Jan to March quarter 2024. As per the detail that the MOSPI has released, unemployment rate in urban areas has decreased to 6.7% during January to March quarter 2024. Along with that, when it comes to female unemployment rate, there is a significant reduction at this front as well. Female unemployment rate decreased to 8.5% in Jan to March quarter 2024. Along with that, when it comes to labor force participation rate, a significant growth at this front as well. As per the report, labor force participation rate in urban areas shows an increasing trend from 48.5% to 50.2%. Timing of this announcement and the release of this survey is very important, as we are in the midst of parliamentary election, and this report could be beneficial for the government prospect going forward. In addition to that, as per this report, increasing trend in worker population ratio for person is 15 years and above from 45.2% in Jan-March quarter 2023 to 46.9% in Jan to March quarter 2024. Along with that, female worker population ratio in urban areas has shown a significant growth. It has risen to 23.4% during Jan-March quarter 2024, a very significant development. So when it comes to employment prospect in this country, this report has shown a very significant growth going forward.
All right, thanks Prakash for all of those details. So urban unemployment has decreased and labour force participation by women has also increased. That's the word coming in from Prakash. But let's take a quick break then. When we come back, we'll take a look at some more stock-specific news.
Hi there, welcome back. Still watching Market Cafe on ET Now. Let's go across to my colleague Ansh, who's standing by with the entire snapshot of what the futures and options sector is expected to play out today, and what the derivative outlook is looking like. And Ansh, expiry day today, what are we watching out for? What are the levels that you're watching out for?
Right, so starting with levels only first, as you can see in the Nifty chart as well, Nifty actually took strong resistance at 50 DMA in the previous session, which is around 22,300, which continues to have a strong selling pressure around that area. Now, if you talk about futures and options, then on option front, yesterday we have weekly option expiry, so we may expect some heavy volatility in the market. On option front, we are seeing call writing happening at a 22,300 strike, indicating option traders expecting Nifty to take resistance around this level. This is the same level where we are seeing resistance on chart as well, which is 50 DMA. On downside, we are seeing put writing happening at the psychological level of 22,000, indicating good support base around this level. Moving on to Nifty Bank, index actually formed a bearish engulfing candlestick pattern in the previous session, which is a bearish sign. But if you'll see it on a longer time frame, then the index is actually moving in an upward sloping support trend line on an upward sloping channel. So this keeps the bias still positive. Whereas if we talk about option front, then we are seeing most active call writing happening at that psychological level of 48,000, indicating strong resistance around this level. Let's now discuss FI position. This is big. FI seem to be holding their biggest total net short position in index future ahead of elections. The total FI net shorts in index future is at 12-year high with minus 2.4 lakh contract. Not just that, but the total short contract in index future have surged over 100% this month from 1.8 lakh contract directly to 3.9 lakh contract. So what does this mean? FIs have become very bearish in the market and they expect some correction in the coming session, or they are just hedging their position. This raises the question, are they on the right side, or will we see a short surge in the market? Only time will tell, but surely we may see some big movement in the coming session. So keep your stop losses tight.
Absolutely. Thanks, Sanj, for that roundup coming in. So those are the levels that you should watch out for, and that's the roundup from the futures and options space. But let's move on and take a look at some earnings then. Berger and IEX have reported a weak set of numbers for the quarter gone by, and Vinny standing by with the earnings fine print as well as the factors that were impacting the earnings as well.
Good morning, and yes, talking about Berger Paint as well as IEX, both of them have reported a weak set of numbers in the March-ended quarter. Starting with Berger Paints, now while you see the volume growth has been strong at around 13.9%, value growth is where there was a miss. 2.7% is all that they managed to give in terms of a value growth. This is mainly dragged by what? The price cuts that they've taken, inferior mix that is impacting overall the growth of the company. Other than that, when you're looking at the operational performance in terms of the EBITDA margins, they have seen a decline of 120 basis points, and this is on a year-on-year basis. This is mainly due to the higher ad spends that the company has been making, as well as the negative operating leverage impacting the margins of the company. So no value growth, margins seeing a decline, and that is something that is keeping Berger Paints on the negative side in terms of a weak performance. Other than that, IEX also, what we're seeing is a 4% top line as well as a 5% EBITDA miss, which is coming this time for the quarter 4. Profits also were missed because of the higher other income, while in terms of a miss that could be mainly due to the incentives that were given to the customers in Q4. So those higher incentives is something that could be impacting IEX. Other than that, the gross volume growth came in at around 16% in Q4, while in FY24 it was at 14%. So yes, a weak set of numbers even from IEX. Let's keep an eye out on that as well.
Absolutely, Winnie. Thanks so much for taking us through that. Berger Paints and IEX have missed street expectations, so we'll see how that pans out for those stocks in today's trading session. But let's keep it going with earnings then. And from the Nifty pack, you have M&M that is all set to come out with its quarter 4 earnings, where revenue is expected to climb. However, PAT is set to decline on a year-on-year basis. My colleague Shrishti, who tracks the sector, is here with all that the street is expecting and what we need to be watching out for when it comes to M&M's quarter 4 numbers. Shrishti, take it away.
Well, yes, M&M stock is trading near its all-time high levels, just ahead of the earnings, and this time around we are expecting a decent set, because do remember the mix was quite distorted because on the back of a weak tractor sales, because their tractor sales were actually down 20% on a YY basis. But it's the auto sales and the kind of a leadership that we have seen from M&M, especially in the SUV pack, that has supported the numbers, because the volumes were up around 14% on a YY basis, taking the overall volume inching up by 3% on a YY basis. So that mix is expected to reflect in the overall numbers as well. This time the revenue is expected at 24,118 crores. That will be a jump of 7% on a YY basis. EBITDA expected at 3,032 crores, and the margins expected to be just flat at 12.6%. And lastly, on the profit figure, we are expecting a number close to 1,900 crores. But the key to watch will be actually the demand outlook, especially for their tractor sales, because this time, as we highlighted, that the tractor sales were really down. So we are expecting a cut of 30 basis point on a quarter-on-quarter basis and a decline in the FES margins. But it's the automotive segment volumes that are expected to do better. And the EBITDA margin outlook is expected to be muted on the back of a weak mix and a slight rise in the discount in their automotive division as well, which all in all big OEMs have done. But apart from the numbers, we will be watching out for the management outlook on the demand, the new numbers that are coming in from the bookings of the XUV3XO, and the automotive margins outlook as well, and if they have any new plans related to EVs as well. So all eyes on the management commentary of M&M as well. Back to you.
All right, thanks, Srishti. So we'll definitely be watching out for M&M then. And let's also get a move on then and take a look at what brokerages are saying about a host of counters. Starting with Colgate first, HSBC has come out with a note and they're downgrading the counter to a hold rating, and the target is also cut to 2,900 from 2,950. When you look at the earnings outlook, they see that normalizing and valuations remaining high as well. They're also saying that margin expansion is unlikely going forward for Colgate. So that's the word coming in from HSBC. Now, let's also take a look at what Dixon Tech, what Jefferies is saying about Dixon Tech then. And they have an underperform rating on the counter. They're saying that the risk reward is stretched. They're also hiking the target to 6,350 from 5,920. And in terms of the valuations, they're talking about how valuations may ease once the high growth phase is over for Dixon Tech. So that's the word coming in from Jefferies. But moving on then, let's also take a look at what Jefferies is saying about Adani Ports then. They're maintaining a buy target at 1,640. And they're guiding for 5 years of double-digit growth. And that is something that they're highlighting, that Jefferies is highlighting. They also remain positive given the capex prudence as well. And what they're also talking about is that their logistics potential is also a sweetener when it comes to Adani Ports. So that's the roundup coming in on Adani Ports. When you take a look at Oberoi Realty and what Jefferies has to say about that counter as well, they have a hold rating. They're also hiking the target for Oberoi Realty as well to 1,548 from 1,341 in terms of their financial year 24 pre-sales. They're seeing that at 4,000 crores, which is below peers, but in terms of execution then, they see execution remaining steady as well. And at 15% plus premium to NAV, the upside is limited, and that's the word coming in from Jefferies on Adani Ports, Oberoi Realty as well as Dixon Tech, and the word coming in from HSBC on Colgate. So that largely is the roundup as far as brokerages are concerned.
Absolutely. Let's shift focus and talk about some news away from the markets then. And Russian President Vladimir Putin has arrived in China for a 2-day state visit, highlighting the relationship between Beijing and Moscow following its Ukraine invasion. Remember, this is Putin's first visit to China post entering his new term as president. Some updates coming in from Slovakia then. Slovakia's Prime Minister Robert Fico is out of danger after he was battling life-threatening wounds as he was shot multiple times in an assassination attempt after a cabinet meeting. Now the police has detained the suspected gunman at the site of attack in Handlowa.
Moving on then, Home Minister Amit Shah hands over the first citizenship certificates under CAA to 14 refugees who had escaped from Pakistan, Bangladesh and Afghanistan. This comes nearly after 2 months the centre has notified the CAA rules as well. Moving on then, and after 4 days of opening, Char Dham has already started gathering record crowds. That brings the hills to breaking point with traffic jams up to 45 kilometers long. The state police has also issued an appeal asking pilgrims to avoid visiting the shrines for the time being.
Alright, well, that's a wrap on everything that we were tracking for you this morning in terms of markets and non-markets and other global news as well. So on that note, viewers, it's a goodbye from me, Shreyansi, and the entire team that put this show together. Thanks so much for watching. But as we bid you goodbye, you stay tuned to ET Now because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.